We trying to get paid.
Making money, make it dollar, dollar.
We trying to get paid.
Making money,
Yeah,
make
you
it.
save and invest, stacking up checks. Let's go.
What's going on, everyone? Terry Julian back here again with another video. And folks, let's jump right into it. I want to let you know how I'm trading this coming week in the market. So as you know, we've had two banks now basically fail, one on the brink of failure. And folks, don't worry, calm down. At the end of the day, you are trading the most liquid, the most stable, the most well-respected market in the world, and that is the U.S. stock market. There's no other place you would want to be. There have been rules put into place that make these large financial institutions safer than they've ever been. So I understand the finance, social media has got you fearing the worst, but don't worry, okay? I'm looking after hours right now, and I can tell you there's going to be a huge move on Monday. And at the end of the day, I honestly believe they're going to overplay the long side, and that's going to give you an opportunity to swing low. So on Monday, I'm going to be looking for where the market is going to be topping out. In fact, I honestly think this could be 2 to 3 days of green here on the SPY. So I'm not looking to get short anytime soon unless I start seeing some strong weakness in the market. So how are we playing this trend? Well, first, as we always do, we put in our rules for trading. We're going to determine the trend, confirm the trend, identify a low risk entry point, and then we select an option that's only going to require a 1% move in the product for us to break even and then start making profit on the trade. So let's already start with identifying the trend. We already know we're below the 100 EMA, so the trend is lower. We confirm the trend using RSI and on balance volume. On balance volume making a new low recently, so that's confirming that the trend is lower. RSI hitting a new low for the year, so at 35 RSI. So we understand the trend is lower. We've confirmed the trend is lower. Now, part 3 is identifying a low risk entry point. We can look using Keltner channel. This is the indicator that we use for that part of identifying the trade. And we can see clearly that this is oversold. This is oversold on the Keltner channel indicator. So right now, I would not want to short this. If you were going into the close and you thought you were going to short the market here as it was going to continue, you're feeling a lot of pain, and you're going to feel a lot of pain over the next 24 to possibly 48 hours as we go into the new week, because this stock market is ready to bounce and bounce really, really hard. So I'm still negative because all the indicators and what we know about what's going on in the market is still very bearish. So I'm going to be looking for a very strong bounce back into the 390s on SPY. And I'm going to start then looking for weakness by, again, selecting a deep in the money call to possibly sell for the rest of the month. Now, I'm still in an iron condor situation, which I'll post later this week. But folks, this is a market that you really need to take advantage of, because this is an exciting opportunity for you to be able to, if you've been standing on the sidelines, you're going to get an opportunity here to sell this market while everybody overshoots it. So be very open to that idea. I've already put out videos to show you how to find find a really great entry point and an option that's going to, again, only require 1% move to the downside for you to be able to start making profit. Because let me tell you something right now, on the move that's going to happen on Monday and on possibly Tuesday, you're going to see a lot of stocks pop that have no reason to pop and are going to be headed much, much lower over the next several weeks and months ahead. So this is not the time to be taking positions that are very close to expiration. Use time to work for you, and instead try to sell out of the money calls, which is what I've been doing for quite a long time here, as we've broken down back in February. Go back to these recent highs, and again, you don't even have to You don't have to do that. I mean, there's so many ways to make money in this market right now, as we, are kind of stuck in a trending market. And that is why I jumped on the idea of non-directional trading almost a year and a half, 2 years ago, because I clearly saw that, the idea that markets always going up just cannot continue to exist, right? It cannot continue to do that, because at the end of the day, we've got to pay the piper back. We've got to pay the piper back. And I need you guys to be with me on that and learn how to trade this market as we go sideways. Because I've said it right now, and I've said it in the past, and I'll say it right now. We could very well find ourselves between 3,400 and 4,500 for the next 10 years. For the next 10 years. And if you're playing, the 401k game, if you're playing the buy and hold game, you're going to lose a lot of money. Not in terms of the value of the stock, but the value of the actual dollar that you're putting in the market. So you need to embrace strategies that give you alpha in a sideways market. So you need to start learning how to do that, and really embracing those ways to trade. All right.